From the world of politics to the world of business, this is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. We have a lot of important news to cover. Let's start with those jobs numbers out this morning. We heard a short time ago from President Biden, who seems rather pleased. Here's the president.
I'm happy to report that our economy has created over 300,000 new jobs last month, and that's on top of 500,000 jobs we added the month before. All told, we've created more than 12,000 jobs since I took office. Nearly 8,000 of them manufacturing jobs. That means overall, we've created more jobs in 2 years than any administration has created in their first 4 years.
To take us through the actual numbers, welcome now Michael McKee. He's Bloomberg International Economics and Policy Correspondent. So, Mike, the president's pleased. It's understandable why. Where are all these jobs coming from? For goodness sakes, we beat yet another month here.
Well, let's point out, I think he meant millions instead of 12,000 jobs in 2 years, because we got 311,000 today. Where the jobs are coming from is an interesting question. We saw, as I said, the total number of jobs go up, but also the unemployment rate rose because more people are out looking for jobs. More good news for the president, and the average hourly earnings were a bit lower than anticipated at 0.2 for the month, and here's the reason why. The jobs that are being created are in the low-wage sectors. We are still trying to find enough people to work at restaurants and bars. 105,000 total there, 68,000 for the restaurants and bars alone. Healthcare and social services, another low-paid sector, saw 63,000 jobs created, whereas manufacturing, one of the higher-paid sectors, lost 4,000 jobs. Now, the hourly wages are important because that's what the Fed's watching in terms of inflation, and service industry jobs are showing an increase in the inflation rate for wages, but goods jobs, as you can see, are way down. Goods jobs prices or wages are falling, and so at this point, the Fed is looking at a rising wage scenario, but one that is smaller because it's lower wage jobs. And that has the markets feeling better, David, about where we are, because you look at the bets on 50 basis points for the March 22nd meeting. They were 70% sure when Jay Powell was testifying on Capitol Hill, and now they're down to the 30s.
Yeah, well, March 22nd gets more and more interesting as time goes on. Thank you so much to Michael McKee for that report on the jobs. Well, that's one very big story today. Another one, of course, is what's going on with the banks, particularly Silicon Valley Bank, which has now failed, been put into receivership by the FDIC. The California regulators stepped in. Earlier today, we talked with former Treasury Secretary Larry Summers about the SVB situation and also specifically how it might have contagion into the rest of the banking system. This is what he said.
I think what's striking is less that Silicon Valley Bank found itself in trouble as it had borrowed short and lent long, and then its deposit base started to crumble, first because of difficulties in the venture capital industry and startup world, and then because people became alarmed about its situation. That, in many ways, is less striking than the fact that you saw substantial moves, even in the country's largest banks, in their stock prices. I think there may well be an element of overreaction in that, but I think it's important to recognize that when banks have long-term securities, even if the banks don't plan to sell them, that when interest rates go up, they have lost asset value, and deposits, which are shorter term, have not lost asset value, and therefore the banks, in a sense, are in a worse position than they were before. So I think, in general, bank accounting probably doesn't fully capture some of the risks associated with this pattern of borrowing short and lending long. And I think there are going to be issues here for regulators to look at. But look, what is absolutely imperative is that however this gets resolved, depositors be paid back and paid back in full. And I don't see anything in any aspect of this situation that would be a basis for that being called into question. And as long as that's true, I don't think there'll be risk to bank asset values and the like, but I don't see, if this is handled reasonably, and I have every reason to think it will be, that this will be a source of systemic risk.
Laura, you mentioned some of the largest banks. Certainly their stock value went down, at least for a time being. It's a little hard to imagine a J.P. Morgan or a Bank of America having to sell long-term treasuries in order to cover withdrawals from depositors. But what about some of the regional banks? Does this put a lot of pressure on other regional, some of the smaller banks? And should we anticipate perhaps even consolidation to try to shake that out?
There may be, and there may be a need for some consolidation. And I think one of the mistakes the authorities could make would be out of a fear of consolidation coming from some kind of populist concern about concentration, blocking combinations that would ultimately operate in the direction of financial stability. And so that's something I think that we're going to need to be attentive to going forward.
That, of course, was Larry Summers. You can watch the complete interview with Larry tonight on Wall Street Week at 6 p.m. Eastern Time. And now we turn to somebody who covers the banks regularly for Bloomberg, Catherine Doherty. She is responsible for finance reporting here at Bloomberg. So, Catherine, thank you for joining us. You heard what Larry said. As long as we protect the depositors, we now have SVP that has actually been put into receivership by the FDIC. Are we protecting all the depositors?
So exactly, the development happened within the hour. Typically, what this means is that the bank's deposits will be assumed by another healthier bank. And the FDIC says it will pay depositors up to the $250,000 insured limit. So the big question then becomes, who is getting paid back? Presumably, it's going to be the insured deposits. And who stands to lose here? And a lot of what Summers has brought up is exactly the kind of questions that we're going to be asking in other situations that might be similar to SVP that's going to unfold in the weeks and the days to come.
Catherine, what about other banks? I asked him about regional banks. Are we seeing any weakness in other regional banks? Should we be looking there?
So the regional banks that our team internally on finance has been told to look at is the ones that might have more exposure to the VC space. So other regional banks that are banking with these VC firms, these are firms that are able to act quickly and pull deposits out. That's exactly what we saw with SVP. You might not see that same acceleration at the bigger banks where you have stickier deposits. They're not worried as much about their clients pulling significant funds in the same way that we've seen with SVP and potentially with other regional banks that bank with venture capital firms.
Well, that's what I was going to ask. With the really big banks, the big money center banks, we saw their stocks go down yesterday and today. They're certainly taking a hit on their stocks. But is there any real prospect that they could have some difficulties, real difficulties? I'm talking about the Bank of Americas, the J.P. Morgans of this world.
So many analysts are coming out and saying this is actually the safest place to park your money. When you have a JP Morgan or a Bank of America that is relying on a deposit base that they've built over the years and has really steadily both grown and also stayed, and they've shown and time again, each quarter they've said that these deposits are sticky. They've proven that they are not seeing the run that we potentially could see at other banks. And you also need to look at just the health of their consumers and these deposits themselves. If we start to see, as they have expressed, the banks, that there's a slowdown in lending, that could end up hurting them. Remember that as rates are rising, this is it's a cost to the banks because they're going to have to pay that out over time.
Catherine, you heard Larry Summers there talk about possible regulatory issues. One of them, he says, maybe we have to take a new look at bank accounting and how we account for those long-term securities, those long-term treasuries, for example, they hold to maturity. They don't have to mark those to market, as I understand it. What would it mean for even the very big banks if that was changed somewhat? Because I've seen some numbers that indicate there's a lot of really long-term treasuries that are not worth what they were just a year ago before we had all these rate hikes.
I think that's what everyone is analyzing now. They're going back to fourth quarter, end of the year filings to look at which of the banks have the most exposure. And it could ramp up the regulatory action. What that just means is you might hear Diamond complaining about even more action and restrictions that is placed on a bank like JP Morgan or Bank of America. But I also think that we should call out the difference between really 2008 to today. There's been so many protections put in place that these kinds of banks that are systemically important and pose so much risk should something happen, there are protections already in place. So the question becomes where in the smaller end, if there's the regional banks or less systemically impactful companies, should there be additional regulation that's now thought about and input in the future?
Okay, Catherine, thank you so much. It's very helpful. That's Bloomberg's Catherine Doherty reporting on the situation with the banks. Coming up, the future of the World Bank. We'll talk with the U.S. nominee for its next president, Ajay Banga. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. As we've been talking about, it's been a pretty eventful Friday already, what with the jobs numbers, and then, of course, the dramatic developments with respect to Silicon Valley Bank. To tell us how the markets are reacting, we welcome back now Kriti Gupta. Kriti, great to be with you. So how are the markets reacting?
Not well, David. Not well at all. Look, risk sentiment is off clearly, and it's off for two reasons. Ultimately, they seem like two different stories. The macro side with this higher jobs print, 311,000 relative to an estimate of 225. But then a kind of micro story almost of Silicon Valley Bank, which is officially due to be taken over by the FDIC, I believe, on Monday. The shares are still, of course, halted for SVB specifically. But the reason this all kind of comes together is in the bond market. And this is really important because within 48 hours, we've had a complete repricing of what the Federal Reserve is going to do in just a few weeks. March 22nd, we went from a 25 basis point hike to 50, right back to 25. And that kind of volatility has shown up in the 10-year yield and the 2-year. I'm looking at a 10-year of 373, lower by about 17 basis points on the day. The 2-year down by about the same margin at 468. The takeaway here is that people are hopping into the bond market originally overnight, mostly because of this kind of fear of contagion, fear of the financial system in the U.S., and whether or not Silicon Valley Bank was an isolated story. Now that we can say pretty confidently that it just might be an isolated story, you're starting to see the narrative around the Federal Reserve drive the bond market action.
Well, an isolated story in the sense that it might not spread to other banks, which makes it an isolated story. I think that's what you mean by saying that.
Right.
But I wonder if it's isolated in the sense that when you raise rates that much, it's going to affect things, including, for example, the value of some bonds that you have. Yeah. That won't be limited to the banks. There are going to be other businesses out there that are going to be facing a different world. Are there unintended consequences inevitable from what the Fed is about?
Yeah, liquidity is really where it comes to. And this is why the contagion question was even brought up, because when you are lending, at the end of the day, this is what banks do. They lend, right? And they lend on a much longer time frame. And when you have yields that move this quickly in the upwards direction, specifically in an environment like venture capital, which is what kind of Silicon Valley Bank was mostly invested in, those returns need to come much faster than, say, a 10-year or 30-year loan that traditional banks would make. And that's where they kind of got into some deep water, essentially dealing with a much more fast-paced and risky environment than a traditional bank would very quickly.
A wild Friday, no question about it. Thank you so much, Kriti, for bringing that to us. You can catch Kriti again at 1 p.m. Eastern Time, when she's going to be anchoring Bloomberg Markets. Still to come, we'll talk with the U.S. nominee to be president of the World Bank. He's Ajay Banga. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Ajay Banga is President Biden's nominee to head the World Bank. He currently is vice chairman of General Atlantic and earlier served as president and CEO of MasterCard for a decade. So, Mr. Banga, thank you so much for being with us. Really good to hear from you. As you look to take over the World Bank, we assume that's all going to go forward as planned. What are your priorities? What do you most want to get accomplished during whatever tenure you have there as president of the World Bank?
Well, David, I think first of all, it's a pleasure to be with you. But I think that the whole issue here is that the model that we've sort of pursued for a while on poverty alleviation, on shared prosperity, it did great for a few decades. But over the last few years, it's kind of slowed down. And I think there are many reasons for that. There's COVID, obviously, but there's climate change and its impact. There's the issue of fragility and conflict in many economies around the world. And there's all those things coming together that are making it much harder to keep doing what we used to do. I think these issues are completely intertwined, and to try and parse them into separate pieces and think that you can deal with climate change without dealing with issues of shared prosperity and poverty alleviation, or that you can deal with food insecurity without dealing with climate change, I think these are all intertwined. And frankly, what has made it even harder is the last year or so of conflict in Ukraine, because that's caused all kinds of trouble for the developing world on the availability of food, fertilizer, and the kind of inflation they're dealing with on so many fronts. So this is a complicated time, and I think we need to look at our prism of opportunity to do something here from a slightly different lens. My view, and this to answer your question directly, my view is that all these parts of the world, be it Africa or other such areas of the world, there are lots of young people there, and those young people are graduating into the workforce in some form or the other, and their hopes and their aspirations and their demand for dignity means not just a good quality of life, which is the traditional development and climate questions, health and education and clean air, but also jobs, because jobs gets them dignity. So I think what we have to do and focus on over the coming period of time is those two things, jobs and quality of life.
So, Mr. Banga, you describe a complex and terribly important set of issues here, and we're focused, I believe, on the lowest income countries around the world. They don't have the resources to deal with things like climate change, for example. One of the big issues, as you know, this pending with the World Bank, a sense that not enough has been done. How do you leverage World Bank assets to the greatest extent possible to really get the results, not just make the loans or make the investment, but to actually get the results?
So that's a great point. I think impact measurement is very much a part of what you have to do. But for a minute, let's step back from this. I think the challenges we just spoke about, this intertwined nature of climate fragility, COVID, pandemics in the future, intertwined with poverty alleviation and the whole sharing of prosperity, these require trillions of dollars of investments in the course of every year if we're going to do things the right way. There is not enough capital in either the multilateral development banks or in governments or in philanthropy. We do need to get the private sector to be a part of this story. That doesn't mean that the World Bank should not do all it can to examine the capital adequacy framework recommendations of the G20 and see to what extent we can create the right leverage from the balance sheet without losing our AAA rating, which is the reason why we're able to do this concessional and free granting into many places. But I think past the operating model and the incentives, the fact is we have to get the private sector into it. And I believe the World Bank can be a catalyst, not just a lender, but a catalyst for this conversation across the other multilateral banks, but also across the private sector. I was telling a bunch of people just now that we may be in different swim lanes, but we're kind of all in the same swimming pool. Mm-hmm. And we do need to figure out how to play well there.
So you mentioned the trillions of dollars required. Obviously, no development bank can possibly come up with that money. You have to leverage private capital. At the same time, for the World Bank role, how much more can you get out of the existing balance sheet by really reforming some of the ways loans are made, investments are made, and how much do you need a larger balance sheet? Will you be looking to increase the resources of the bank?
So I think the first thing we've got to do is to work our way through that capital adequacy framework and see how much more we can leverage our current balance sheet. There's some incredibly important recommendations in that framework, and I'm certain some of them will be easier to do, some will be harder, and some will not happen at all. But we've got to work our way through them with every sincerity of purpose to get the most we can. Once we do that, and we start leveraging our ability to get the private sector in. And I can assure you the private sector is keen to be a part of this play. They need the right ability to play, but they are keen to be a part of it. And then once you've been through that kind of thinking, if there is the need to go back to increase the balance sheet of the World Bank and other multilateral institutions, we will have that discussion with the donor countries. But here's what I would bring you back to. Doing all that inside the donor countries and the multilateral development banks, it's still in the billions. Our requirement is in the trillions. We do need to find a way to focus on that private sector opportunity. I wouldn't want to get diverted from that.
Is the AAA rating sacred from your point of view?
Yes, because I think that's the reason why we're able to raise capital at the kind of prices we can, and that's the opportunity that the bank has to be able to then use that difference to be able to be a responsibly priced lender or a grantor. The idea is basically grants into the developing world.
Mr. Banga, finally, let me take advantage of you here because we have this big story involving
Yes.
the banks coming out of Silicon Valley Bank. And you were at MasterCard for a long time, very successful there. You also now are at General Atlantic. What do you make of the situation? Not so much the specifics of Silicon Valley Bank, but does this raise larger issues as we're raising rates and some of the values of securities are going down? Does it potentially raise larger issues for the financial system?
No, I think the financial system is in a way better shape today than it was when the last financial crisis happened, for all the good reasons that have happened since then. The reforms, the capital adequacy systems and the like. These long-dated securities, every bank actually indicates they're held for sale or held to maturity and indicates what the difference is. The fact is this is a liquidity issue as compared to that aspect of the valuation of those securities. And to me, the broader financial system in the U.S. is in a fairly good shape on all of those parameters. Now, I'm not close to a lot of the data. I've been away from it for a little while. And over the last few weeks, I've been completely engrossed in what I'm doing right now and traveling the world, starting with Africa and now in the UK and on to the EU and going to Japan and China and India to meet donor and borrowing countries. So to be completely honest, I'm in a slightly different place. But our colleagues at the Treasury are all over it. And I know that Secretary Yellen said as much today. So I think we should watch that space.
What about the tours around the world? Give us a sense. Is that mainly for you to learn or for you to transmit?
No, for me to learn. I am very keen to meet both donor and borrowing countries, to meet NGOs, to meet opinion leaders, to meet receivers of funding, which I have been doing in my last Africa trip. I was in Cote d'Ivoire, where I met the African Development Bank and the government and civil society. Went to Kenya and met a few projects we were working on, but also the government. So very keen to learn, very keen to pick it up. And
got some strong reviews from the press accounts. Thank you so much, Ajay Banga. He is U.S. World Bank President nominee. Coming up, we're going to get an update on the war in Ukraine from retired Brigadier General Mark Kimmitt. And this is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We turn now back to the war in Ukraine, which wages on, particularly around Bakhmut, with a really contested city there. It's unclear exactly what's going on. And spring is here. We've been told there'll be a spring offensive. We haven't seen it yet. Let's turn now to retired Brigadier General Mark Kimmitt. He served under President George W. Bush, both as Assistant Secretary of State and Deputy Assistant Secretary of Defense. So, General, thank you so much for being back with us. Always great to have you with us. Sure. Give us your sense of what's going on right now over there in Ukraine. Where are we? Are we in stasis?
I really believe so. To me, this looks much like World War I. You've got this very large battle going on in Bakhmut, but it doesn't really have significance. They're making an inch at a time and losing 1,000 soldiers at a time. So at the end of the day, it's carnage, but it's not progress.
We heard overnight about the use by the Russians of so-called hypersonic missiles. I guess these can even be redirected in air and may be able to elude any sort of air defense. How important is that potentially to the balance over there?
Probably not much. I think that these are missiles that can get through the air defense systems of the Ukrainians. They could be counteracted perhaps when the Patriots get there. But I think we've got to remember that what's going on is a strategic bombing campaign on the part of the Russians who are trying to convince the people of Ukraine to give up since they can't get the soldiers of Ukraine to give up.
Mark, we've heard about a possible spring offensive by the Ukrainians. Do they need to go on the offense? Can they simply play defense?
Well, they can play defense, or they could move to more favorable defensive positions and use the next few months or perhaps the entire year to get stronger. We introduce better weapon systems such as the tanks, such as the armored vehicles, possibly fighter jets, and use that time to chew up the Russian forces even more so that when they do conduct an offensive later on, they'll be in much better shape. However, I think there is some imperative on the part, and certainly a desire on the part of Zelensky, to conduct some sort of offensive this spring to demonstrate progress, which is the only way to keep the people of Ukraine behind him and, candidly, to keep the West behind him as well.
We've heard a lot about limits in, for example, ammunition, not just weapon systems, but ammunition. Is there any limit to the Russian ability to throw men into the battle? Not necessarily trained men, not even necessarily equipped men, but still men. They keep throwing it at it. Can Ukraine win that war?
Well, that would be an inflection point, because if you start talking about the entire population of Russia possibly going into the fight, that would require a general conscription, not just bringing back reservists and bringing in prisoners working for Wagner Group. I think it really would be a sign of desperation on the part of Putin if he had to go and do a general draft of his troops. Could he do it? Sure. Could he take the casualties? Yes. They've certainly done this before in wars previous to this. But it really would be an inflection point for him as a leader and for the Russian people.
You mentioned the Wagner Group. There was a report in the press today that perhaps what's going on in Bakhmut might be a turning point for Wagner Group, one way or the other, that if they don't deliver in Bakhmut, they may actually have some real problems. Do you agree with that? How critical is the Wagner Group, and how close to a tipping point are they?
Well, they could be close to a tipping point because they are truly running out of soldiers. But it probably would not be an inflection point because they have really been the only ones that have achieved any kind of success over the past 4 or 5 months. But their success depends on a constant resupply of recruits and volunteers, and that number is drying up. But they're about the only ones that are willing to seriously fight and have done so over the wintertime. Can they continue to get more people to jump into the slaughter? We'll see. I think not.
General, Iran has played a role in this, in helping Russia, particularly with drones and other supplies coming in. Now we hear today that Saudi Arabia apparently has had something of a rapprochement with Iran, brokered evidently by President Xi in China. Could that have an effect on the conflict in Ukraine if, in fact, Iran doesn't feel quite the same pressure?
I really don't, David. Look, what Iran is getting from the Russians are more advanced weapons systems that the Russians are picking up on the battlefield. They're sending them down to Iran. They will be reverse engineered the way that they reverse engineered our TOW missiles and some of our earliest drones about 15 years ago. I actually think that is more significant because that will put more pressure on the countries in the region as Iran starts introducing far more advanced weapon systems, copycats of Javelins, copycats of Stingers, and that makes them actually a greater threat in the region. In my mind, this rapprochement with Saudi Arabia, in the case of the Saudis, could very well be, it's a matter of keeping your friends close and keeping your enemies closer.
And more broadly, Mark, if you go back to the beginning of the war, it was hoped that a lot of the world would be against Russia and what they're doing in Ukraine. If you go back to February 24, I'm not sure how many people on the sidelines have come off on the sidelines. I'm talking about India, Indonesia, certainly China. How important is the battle for the hearts and minds of the global South, I guess many people call it?
Well, this is very much like we saw in the 60s. We're seeing a beginning of a non-aligned movement, which is another way of saying we don't want to be anywhere near when the elephants are running around. So I don't necessarily think they support, nor do they not support. They just don't want to get involved, and they don't want to have to make a choice.
Do you have any doubt of the coalition remaining as intact as it has been, which is, at least to my way of thinking, quite remarkable? And for that matter, support from Capitol Hill. We hear some grumblings, but it appears that that's subsiding. Is that your impression?
On the latter point, yes. Look, Congress always has had a responsibility to approve weapon systems transfers to other countries. I think their nose is in a bit of a snit because they have not been involved in the weapons transfers, which is their long-standing responsibility. So I'm not too concerned about that.
Okay, Mark, it's always been great.
And as regards the coalition, that's something you've got to nurture every day. That's something you can't take for granted. The president has got to stay on top of that because if he doesn't, he'll lose it.
Okay, thank you so much. It's always so great to have you with us. It's retired Brigadier General Mark Kimmitt, who served under President George W. Bush as an Assistant Secretary of State and a Deputy Assistant Secretary of Defense. Coming up, we'll talk with the Attorney General of the state of New Jersey, Matthew Platkin, about his priorities, particularly in dealing with the law enforcement in his state. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We talk on this program, Balance of Power, about legal issues almost every single day. And you know who has to deal with the full range of them? They're the Attorneys General of the United States of America. And we welcome one now, Matthew Platkin. He is Attorney General of New Jersey. So, Mr. Attorney General, thank you so much for being with us.
Thank you for having me, David.
From where you sit, give us a sense of what the biggest issues are that are on your desk on a given day.
Well, as the chief law enforcement officer in our state, first and foremost, my top priority is keeping our residents safe. And that primarily today deals with responding to the epidemic of gun violence. We have a gun violence epidemic in this country, and unfortunately, New Jersey is no exception. So we're doing everything we can, from intelligence-based prosecution to holding gun manufacturers and retailers accountable to investing in community-based organizations that have credibility on the ground that can intercept and disrupt that cycle of violence.
How much are you hampered, if at all, by some of what the Supreme Court's doing in the Second Amendment these days? Because the Supreme Court has cut back on some state gun regulation to say you can't do that. Like concealed carry, I think you've got an issue in New Jersey.
Yeah, there's no question that we disagreed strongly with the Bruin decision. And we know that strong gun laws keep us safe. We know that when you have fewer concealed carry permits out there, there's fewer people getting shot. That's empirically true. But we don't deny that the Bruin decision is the law. And the governor and the legislature got together and signed a broad set of laws that restrict concealed carry to places that make sense to restrict it to. Keep it out of bars and restaurants. Keep it out of schools. Keep it out of hospitals. If you want to bring a concealed carry firearm into your home, you have to at least ask that person before you do it. That's what that law did. We're in court defending it now, and I believe that law is entirely consistent with the Bruin decision, as well as the precedent, the historical precedents that we have to show under that decision.
One of the challenges it strikes me we've seen play out across the country is how you really enforce the laws, keep people safe on the one hand, without overstepping the boundaries. And we've seen some instances around the country of exceptional police wrongdoing in injuring and killing people. How do you strike that balance? I mean, are we asking too much of our police?
Well, trust with law enforcement is essential for them to do their job. Because if you don't have trust, nobody's going to pick up the phone and call 911 if they don't believe that the person on the other end of that phone has their back. And so everything we do goes towards building that trust. And yes, when something happens 1,000 miles away, as it did with that awful murder of Tyree Nichols in Memphis, it affects the trust, not just in Memphis or Tennessee, but in New Jersey. And so everything we do is geared towards maintaining that trust. And I do believe, to answer your question, that we have asked law enforcement officers to do too much. We've asked them not only to be patrol cops, but mental health professionals and addiction counselors and social workers. And so in New Jersey, we've launched what I believe is going to be a national leading program, a co-responder model called the mental health, called Arrive Together, where we send mental health professionals with plainclothes officers to calls that involve mental health or emotional distress.
We've seen, I believe, across the country a rise in hate speech, and more specifically, anti-Semitism. We're seeing a lot of instances. I believe you've had some in New Jersey. What is the situation in New Jersey? What can you, as Attorney General, do about that?
Well, hate is on the rise in this country. Hate is on the rise in just about every community, no matter who you are or how you look or where you're from, how you pray, who you love. communities are on edge, and the Jewish community is no exception. We've had some alarming anti-Semitic activity in the state, including just recently an attempted firebombing of a synagogue not too far from where I live. And so we are doing everything we can to respond to these threats. In that case, we partnered very closely with the federal government, with the United States Attorney's Office and the FBI, and we prosecuted that individual to the fullest extent of the law, and we do that. But we also have what I believe to be the most robust reporting system for potential civil rights violations or bias incidents in the country. We make it very easy. We're trying to build trust with communities so they know. Tell us everything that you know is going on. Don't you make the decision about whether you think it's big enough for us to respond to. Let us make that decision. And we'll look at it from a criminal lens. If we can't make a criminal case, we'll look at it civilly, or it'll inform our policy response.
Cryptocurrency is an issue at the federal and the state level, both. I mean, there's a lot of talk about regulation. The federal hasn't really gotten done yet. There are some efforts at the state level, including in New York with respect to Ether that's been done. Where is the state of New Jersey when it comes to regulating cryptocurrencies like Ether, for example?
Well, we have looked at cryptocurrencies the same way we look at our securities. If you're selling unregistered securities, you're violating our securities laws. And we have held crypto companies accountable in that space, and we'll continue to do so. There's a lot of debate right now and a lot of discussion around new regulations, both at the federal level, but also at the state level. And I do think states play a critical role here. We're more nimble, we can respond quickly, and in many cases, we can be test cases for how we properly regulate new and emerging industries like cryptocurrency.
What's the process by which you will determine in New Jersey whether, for example, I'll pick one, Ether is a security? Because there are a lot of ramifications of that.
Well, we have without speaking to any particular asset, we have a very strong securities regulation team. We look at everything. Again, if something violates our laws, then we use all available tools at our disposal. And we will do that not just in the crypto space, but in all securities.
Mr. Attorney General, you have a lot on your platter and a lot of complicated issues. One of the issues we talk about at Bloomberg all the time is ability to attract really qualified, skilled employees. Lawyers are employees as well of yours. You have a lot of lawyers working for you. How difficult is it to get the best and the brightest to show up to New Jersey and say, yeah, I want to be on the Attorney General's staff?
Well, I will say it hasn't been too difficult. I think we're selling something that people want. We bring some of the biggest cases in the country. We're leading national efforts, whether it be in social media, climate change, cryptocurrency. You name the issue. We're leading the efforts to combat gun violence. We're protecting abortion rights. We're doing things that people care about. And so for young and even seasoned lawyers, there's no better place to work. I've had the privilege of working in the private sector, in government, and now as the chief law enforcement officer in the state. This is the best place I've ever worked. And I think for any lawyer in New Jersey or even in our neighboring states, we have people who cross over and come work for us too. It is a great place to work, and you'll get great experience, and you'll really help people.
In a prior life, I was general counsel for a big publicly traded company, and it made all the difference in the world who the CEO was. It could be a great job or a very challenging job. How's your CEO? You're appointed by Phil Murphy, are you not?
I am appointed by the governor and confirmed by the Senate, and I serve a term. I've had the great privilege of working with the governor for many years. I think he's doing a phenomenal job, and we now represent his office in many ways. But the beauty of this job is I have the independence to do what I need to do, and he has never once crossed that line. I was his lawyer for 3 years. I know that he wouldn't, and we have a tremendous partnership. But like I said, I think he's doing a tremendous job.
That's the best boss in my experience to have as a general counsel, to have somebody who really doesn't cross the line.
Absolutely.
Thank you so much. Really a pleasure and privilege to have you with us here. That is Matthew Platkin. He is Attorney General of the state of New Jersey. Now we want to turn back the markets and bring back in Bloomberg's Kriti Gupta. So where are we, Kriti? How much activity are we seeing?
Well, we are seeing a little bit of activity. I mean, sentiment is still worsening when you look at the stock market. But, David, we got to talk about the bond market here because we're looking at a 10-year yield of 3.70. Those yields just keep dropping and dropping. And it's not just on the sovereign level. You're seeing it on a corporate level as well, specifically with Silicon Valley Bank bonds. Their 10-year bonds going out to 2033, David, get this, widened over 1,000 basis points. It is officially trading in distressed territory. Essentially, that's a move of almost 10% in either direction. That's kind of how much volatility you're seeing in these bonds. And it really comes down to the idea of, look, these stocks and this bonds are still halted for trading. The FDIC can only do so much. What happens when they start trading? There's a lot of people who are holding that the stock and that debt who are going to lose a lot of money.
Yeah, exactly. A lot of money being lost here. I guess maybe some people are not too surprised. Are we seeing more effects in the banking stocks today? We saw a lot yesterday.
We definitely are. Now, look, one of the major kind of concerns was that contagion effect, and where you saw this kind of global sell-off in financials from your big banks, your JP Morgans, your Barclays, even your HSBCs, all the way down to the little ones, Western Alliance, for example. Now you're starting to see a little bit of divergence. The smaller banks, First Republic, for example, Western Alliance, some that are kind of working in tandem or size-wise is similar to Silicon Valley Bank, those are still getting hit hard, David, despite reassurances that they are fully diversified and protected by some of the issues that are plaguing SVB. But the bigger banks, your JP Morgans, your Goldmans, some of them actually went positive and actually paired some of those losses. The S&P 500 Financials Index only lower by 1%. And I say only lower, David, because it was lower by much, much more overnight and in yesterday's session.
Obviously, we're concerned about the companies involved, the individuals losing money, the depositors, things like that. At the same time, what does this mean for the Fed, if I can come back to that for a second? Because this is not tightening financial conditions. It's having the reverse effect. This is not taking things, I don't think, in the direction the Fed needed to go.
Well, there's restrictive and then there's kind of suffocating. And that's one of the questions that a lot of people have is SVB an isolated story in that SVB specifically wasn't able to diversify and therefore had to be taken over by the FDIC? Or is this more kind of representative of the broader issue that perhaps the economy and the markets and the banking system can't actually digest this extremely hawkish policy that they've seemed to be able to digest thus far? And that's going to be the major question going into the conversation on March 22nd, the next FOMC meeting. Are they discouraged to go by 50 basis points, given that very hawkish payrolls number, simply because of they're worried about that digestive ability?
Well, that points in one direction. We've got CPI numbers coming out Tuesday of next week. That could point in the other direction. Could the Fed get caught in between those two?
It kind of already has, and I think this is where the payrolls number was so significant. 311 coming out, the estimate 225. On the surface, that should be a hawkish read, but look at the wages. That's really where you see a lot of the kind of important piece of the equation, which is that the wages were coming down. So some of those inflationary pressures are coming down a little bit. The question is, do you see that in shelter costs? That's what's making up the bulk of the inflationary rises, at least in the last few reports. And that's really, David, where you're seeing a lot of pain, even with mortgages, supply-wise coming down, given the higher rates there.
Yeah, the issue was we heard from Fed Chair Powell, they had the tools to deal with inflation. He didn't quite cover how painful it might be, right, Gritty?
It did not cover how painful it might be. Look, the emphasis has really been on the commodity space. The oil prices coming down, food prices coming down, shelter costs remain sticky, wages remain sticky, and those are the two places where the focus is now shifting. As we start to be reassured by the wages, the shelter is going to be in focus.
Thank you so much, Kriti. I really appreciate you coming back on the market. That's Kriti Gupta from Bloomberg. At 5 p.m. Eastern Time today, Bloomberg Technology will have a special hour dedicated to the fallout over Silicon Valley Bank. Coming up, we heard from Larry Summers early in the program about the plight of the Silicon Valley Bank. We're going to go back to Larry to ask what the Fed needs to do to get inflation under control. That's coming up next on Balance of Power on Bloomberg Television. We turn now back to Larry Summers on the subject of what the Fed needs to do to get inflation under control.
My guess now is that it's nearly 50-50 that we're going to get to and need to get to 6% Fed funds or above. I am skeptical of the idea that monetary policy somehow still has a lot of lags to operate. I think in a real sense, markets started pricing in the tight money quite some time ago. I think the fact that financial conditions have shown some looseness makes me doubt a bit the delayed action thesis. There are grounds for concern down the road, so it's a mixed picture. But my best guess is that if Chairman Powell is committed to the 2% target, and I think that that's something he certainly sought to emphasize many, many times, that you're likely to need to see further rate increases from here on a meaningful scale, and that would take you up at least close to the 6% range.
You can watch the full interview with Larry on Wall Street Week tonight at 6 p.m. Eastern Time. And starting Monday, I'm going to be devoting all my time to Wall Street Week. That means, unfortunately, I will not be able to join you here on Balance of Power, but it'll be even bigger and better with my colleagues Joe Matthew and Anne-Marie Hordern, airing at 5 p.m. Eastern Time.